If you truly want to become a consistently profitable trader and consistently make $10,000 a month from trading, then I'm going to share with you exactly how. In this video, I'm going to give you my full trading process on exactly how smart money, banks, and financial institutions are manipulating you on a daily basis and you can't even see it. I'll teach you exactly how to see it and, more importantly, how to capitalize from this crucial manipulation that happens on a daily basis. So stay tuned. This is a 5-part episode. Part 1, I'm going to share with you the smart money, banks, and financial manipulation model. And then through the rest of the steps, how to build a trading edge around that knowledge. And then finally into a trade breakdown of a trade that I took today, incorporating all of these principles together into one step-by-step plan. And I'll show you the proof. Let's dive in. On the screen right now, you are seeing the exact trade that I took today and the exact trade that I'm going to break down to you at the end of the video. Here's an MT5 screenshot of this specific trade, and let's dive into the principles and trading plan behind this trade so you can take trades just like this on a daily basis. Okay, let's dive into lesson number 1 about how smart money is actually manipulating you on a consistent basis and you can't even see it. Just before that, don't forget to like this video and subscribe to the channel if you're not already so you don't miss no BS trading education that will actually make you profitable. Let's dive in. Okay, so how does smart money manipulate you? Well, this is a primary principle that I need to share with you just before we get into the technicals. Okay, so how is smart money manipulating you? More importantly, why? You see, to understand the how, we have to first understand the why. We have to understand the motive and how they actually operate on a daily basis. You see, smart money that we refer to is actually large banks, financial institutions, governments, big corporations, and all of these large entities that actually move the market. Now, how do they manipulate your positions? Here's the thing. Let's say Bank A needed to push the price higher. They wanted to put $1 billion of orders in the market. Well, they can't just get $1 billion of orders filled at this specific price level right here, because for them to do that, they would need another participant on the other side of the market who would also match that same order of $1 billion. So what do they have to do first? They have to manipulate hundreds or thousands or millions of traders into taking the other side of the market. How do they do that? Well, what they do is they understand primary trading strategies in the market. I'll give you an example right now. Every low and every high that you see are very important levels because everybody, yourself included, probably places your stop loss below a low or above a high. So we know that every low and every high has stop losses, and those stop losses, sell stops, they trigger as buy orders. So again, don't want to get too technical here, but let's say price comes down like this, right? And let's say the bank wants to actually buy, right? It wants to put $1 billion of buy orders. Again, not going to get filled for $1 billion in here. Mine get filled for 10 million and another 10 million and another 10 million and another 10 million to up to $1 billion. And by that point, they brought some here, some here, some here, some here, some here, some here, and they didn't get the average order value that they actually wanted. So they have to engineer liquidity, what we call inducement. So they understand that at these stop loss levels, like down here, let's say, for example, you are a buyer, right? You buy your position in here, and when price comes down to here, so you get tagged in, you take a stop loss, which isn't surprising. This stop loss right here acts as a sell. So if you put a $100,000 trade on and it hits your stop loss, you are putting liquidity into the market. You are selling at that level and adding sell side liquidity, right? Very important to understand. So what they do is they push price into these very lucrative and liquid areas just before the real move. Number one, there are a lot of stop losses on here. So they know then that if there is, let's say, $300 million worth of stop losses at this level, that when they push price into this level, at that very moment, they can execute $300 million of buy orders and they will get filled at a balanced price because their goal is to, let's say, get into the market at this specific price level, let's say 1.051, right? That's their goal. They get to the market, they have a weekly plan. I need to buy X amount of dollars worth at this specific price for 3 weeks time. They will first manipulate into these lows because they know that all of the stop losses are there, which means those stop losses act as sell orders so that they can use those sell orders to get their positions in without moving the market and getting better prices. Better yet, guess what? There are also other types of traders, those that we call breakout traders, right? Or support and resistance resistance traders, because what happens is when price comes into this level like this, there are so many sell orders below this low, because you have the types of traders that look at this level of the market and they say, if we break this level, I'm going to sell, because we are obviously bearish, right? Selling momentum is going to take price lower. So now you have all of the stop losses of the buyers, which acts as sell orders. And now you have all of the sellers in the market that think the market is bearish. So now you have thousands, if not hundreds of thousands of market participants that are all putting sell liquidity in the market. And what do? They absorb all of that liquidity to fill their goal, right? Which is a certain amount of orders at a certain price level. Once they've fulfilled that prophecy, then price can continue. Then they can move the market, or other participants can move the market for them. So once you see this, a run on a very clear and obvious sell side area, and then you see a shift in some kind of market structure and a pullback, that's our trigger that now it's time to go. They've done what they needed to do. And then we push price higher into buy stop regions, right? And again, this sounds very easy, very simple, and like anyone can do it. But there are a couple of things I'm not yet shared with you, because it's not every high and every low. It's specific highs and specific lows that they do this to on a daily basis. And that's what I'm going to share with you in the coming episodes. Let's dive in. And that leads us into lesson number 2, which are the key liquidity levels that these BFIs, right, these smart money entities use to manipulate you, that you probably didn't even know existed. So let's dive into them. You see, what we have on my chart right now is a multitude of different colored boxes. And I get a lot of questions in the comments all the time. What are these boxes? How do you mark them out? Etc, etc. Well, the green box represents London session. This is my London window, right? The yellow box represents New York session. The blue box represents Asia session. Each of these different levels have different jobs to do in the market, and they all kind of have, each of these levels are primary drivers of market liquidity. So how do we understand that? Well, the key here really and truly is the Asia session high and one other level, which is the previous day's low, and arguably one of the most important levels in your entire understanding of liquidity. Previous day's low and previous week's high or low. Previous day's high is also effective. You see, when you have a very bearish market like we have right now, what this essentially is number one, we are very overextended, right? One thing you have to understand about these markets is that the market is always gravitating towards external liquidity, internal liquidity. That's what creates our market structure. So what are these internal to external levels? Well, if you look at market structure, for example, right, let's say price generates like this. So okay, let's say we're bearish. Well, now what we have is we have our swing high. For those of you who do know market structure, amazing. For those of you who want a truly comprehensive guide to knowing exactly what direction the market goes every single time, I'll leave a link to another video in the description down below. But these external points, right, this high here, this low here, they are external ranges of liquidity. They are on the outside of price. Everything inside is internal liquidity. So what happens is price gravitates towards one of these external levels, and then what does it do? It comes back up to internal levels, and then it will continue to external levels. And then once it's run those external levels, it will come back to internal. And so what we have to understand is, what are these external liquidity levels? Let's go back to the price chart for a second and let's have a look if you can see. This low that I'm mapping out right here is the low of the previous day. So number one, we already know that there are a bunch of stop losses in this level. We also know that if this previous day low gets liquidated, there are going to be so many sellers that rush to the market to try to get involved in selling price. So we now know in this specific area, there are a lot of buyers and a lot of sellers, right? Buyers meaning, this is the area in which they brought from previously, and their stop losses are in these levels. So there is a lot of sell side liquidity, meaning when price triggers this level, so much selling liquidity is going to come in, and smart money can consume that liquidity. Another very key and important liquidity level coming into London specifically is the Asia session high and the Asia session low. It's very, very common to have a daily cycle where price manipulates Asia low and Asia high in one session. If you've watched any of my other content, you will know this principle in depth already. It's one of the primary principles that I use. So this blue box right here, a lot of the times the high and the low are very, very important targets. Now, our goal every time we come into the market is to understand, where is the target for liquidity? So if we look at this right here, we see two things. And I came into my trading session today and gave this exact step-by-step plan to my members. I'll even put a little bit of a clip in there if you'd like, of what exactly it is that I'm looking for. Step one, because we are bearish, by the way, I'm expecting lower prices. We're very bearish, but we can always have, after an external range liquidity, we will always have some kind of temporary pullback before potential continuation. So that's a very important concept to understand. So my game plan was simple. I am either waiting for this liquidity to get taken out, because the problem is how many traders are in here? Well, this is Asia high, a lot of liquidity. Not only is it Asia high, it's at a level of relatively equal highs liquidity. Not only is it at equal highs, it's also at a, an area of what a lot of traders will look at as a very aggressive area of resistance, right? And again, these are the things that you have to understand. You have to understand, where are all the other traders, because smart money needs that liquidity. The market hunts for liquidity on a consistent basis. So if you can identify where everybody else is positioned, then you can start trading in that direction, because that's where the market is going to. That is the job of the market. So when I come in, I identify all of this buy side liquidity, identify this sell side liquidity, and then I literally go, okay, if we run buy side first, so if we run into the buy side liquidity first, then I will trade short. If we run into the sell side liquidity first, then I will trade long. That was my game plan. Quite very simple. Why? Because I'm focused on key liquidity levels that, again, you probably didn't know existed. So to recap very briefly, key liquidity levels: previous day's low or previous day's high, Asia session high or Asia session low, anywhere there are equal highs or anywhere there is an area of resistance. Right, all of these levels are where there are stop losses, and price is going to hunt those levels so that smart money can fill their orders at a price that they actually want to fill their orders at. So that takes me into lesson number 3, which is really and truly, how do you trade off the back of that, right? You need some kind of model. So let me give you a quick theoretical lesson and we'll dive straight into the practical lesson, right? The theoretical lesson is what we just had right here. When you have this kind of, let's say you're bearish in your price delivery and you have kind of something like this, right? This kind of price delivery. And then you say, Asia session range looks something like this. You have previous day's low, which is down here. You have equal highs across here. Okay, so we have buy side liquidity like that. We have sell side liquidity like that. We are overall bearish. Cool. So now it becomes a game of we wait for a liquidation, right? Which again, we had. So if it was buy side or sell side, same thing. We wait for a liquidation on the 15-minute time frame. Once I see that it's a clear liquidation, that is usually confirmed with a lower time frame market structure shift. So if I'm looking at the market on the 15-minute time frame, which I do, on the 1-minute time frame, once we run into that level, this is what I'm looking for. Because on the 1-minute time frame, when price comes down, it is obviously bearish in its overall market structure. So I just simply wait for some kind of pullback and shift. Once I see this, I already understand the order flow has changed. Guys, the market is very, very simple. All you have to understand is if there are more buyers than there are sellers, price will go higher. If there are more sellers than there are buyers, price will go lower. You can see in the candlestick charts what side of the market is in control at any one given time. The lower the time frame you go, the quicker the data that you see is. But doesn't mean it's always the most accurate. That's why you have to combine multiple different time frames. That is the key. If you don't have an understanding of how to read all price, multiple time frames, and tie them all in together for a comprehensive understanding of where the market's going to go to, you're already pretty much doomed. So the 15-minute time frame runs into a key area of liquidity. The lower time frame is putting in high, lower low, lower high, lower low, lower high, lower low. Okay, so we're obviously bearish, but we've just run into a key liquidity level. And then when you see lower low, higher high, right, so a change of character or some kind of market structure shift, could be a displacement, could be a market structure shift, could be a change of character, right there is our confirmation the order flow has shifted. And that means we are now heading in a different direction to go and take the next area of liquidity. It's that simple. Price goes from external range liquidity to internal range liquidity. So, and here's where this is and why it's such a genius understanding of the market. Because guess what? If we run this low and price just continues trading lower, we don't trade. We're not just putting an order on this level and stop loss down here and hoping that price reverses. No, we are waiting for perfect order flow realignment, where price shifts from being lower time frame bearish to lower time frame bullish, giving us a lower time frame low and a high, and then a high that gets disrespected to the upside. And then what we're looking for, again, this is where the market is truly magical, honestly. The way that the market works in fractals, which is, you've probably seen fractals before, right? What you see on a higher time frame, you see on a lower time frame, the exact same thing. So pay close attention to what you see right here, because what I'm about to share with you on a lower time frame is just as key. Because what we wait for is a push up, a push down, and a shift. Then we need to identify the area in which smart money kind of, get in. And that's why you see a cluster of orders. So what you see in this level, in our order blocks that we call them, or supply zones or demand zones, or whatever you really want to call them, all we're really understanding is where are the orders sitting. What happens in this level is price, just before it goes into the low, we have some kind of range, some kind of manipulation on the lows, and then a shift higher. Right? It's this same thing. For those of you who know me, this is my model over and over and over again. We have a range, a manipulation, and then an aggressive bullish move. And we want to identify where that range sold, and then when that range bought, and that becomes our order block. That level right there is where we take our entry from. Once we essentially take that entry, right? This is our entry then. So what you go and do is you go longs, take your entry, put your stops just on the low, because the reality is if price continues going lower, you've taken a loss. That's completely fine, right? No strategy is ever going to work 100% of the time. This specific strategy has the flip of a coin probability. So it's around about 49, 51% win rate, depending on any given day, month, week, etc. So if that happens, then great. The trade is completely invalidated. No problem. But what we're essentially, betting on is that this new structural level holds, and now we go for a different area of liquidity. Well, that area of liquidity, again, it can be Asia session high, previous day's high, old London high, old New York high, equal highs, just a random old high, a area of support, resistance, all of these different liquidity ideas that I've shared with you many times over, an area of key liquidity. Now, what you want to do is you want to take if you can, the most important level of liquidity, which for me is 9 times out of 10 Asia session high. You've seen it on this channel 100 times already. It doesn't change. And I get this so many times. Why do you make the same videos all the time? Because I trade edges that actually work. I trade fundamental market principles that actually work. I don't change things, right? So if it ain't broke, don't fix it. This is our entry model. That's where we take our trade. We look up into this level in here, and this Asia session high becomes our take profit level, or at least one of our take profit levels. And that is literally it. So now if we go and translate what we've just taken away in that lesson right there, now we come into the live market. Remember, where in green is my London session window, right? This is the game plan I give to the members literally this morning. And it's either we run the highs and I look for sells, we run the lows and I look for buys, because I understand that this is a key liquidity level and this is a key liquidity level. So the likelihood is once price collects these orders and artificially induces that level, we'll have some kind of pullback. And I just want to go to the next level. So it's either boom, boom, or boom, boom, right? One liquidity pocket to the other liquidity pocket combined with my confirmation entry model. That's it. So if we play price out, this is essentially what happened. We'll go to the 15-minute time frame, right, which is the time frame that I always read market structure and all of these things in. We have all of this buy-side liquidity in here. Our main source of buy-side liquidity is right here. And yeah, pretty much you can see this low down here. Oh, and by the way, guys, smart money traders, even though I identify myself as an SMC trader, they can also be induced if they don't have a true understanding. Just order blocks aren't going to make you profitable. Just fair value gaps aren't going to make you profitable. There are thousands of fair value gaps. There are thousands of order blocks. It's about understanding which ones work and which ones don't and why. So you can already see it right here, right? There's a smart money order block right here on the edge of a low that, arguably broke an old high. Some smart money traders that don't really understand the intricacies of why they do what they do, right? Even some smart money traders are liquidity because they have their buy orders in these levels of demand and their stop losses at these lows. So what happens? You wait for a run of liquidity. You sit on your hands because you understand that everything that happens inside of that range is not important. You're waiting for the move, the real move. And now look, when you get that, And again, you can always identify liquidity from very sharp, aggressive moves and fast reversals. So when you get such an aggressive move into a low with such a heavy wick, it is so obvious what has just happened. Once you get your liquidation of the low, you want to drop down into your 1 minute time frame, right? Your 1 minute time frame, because this is what's going to give you the confirmation. Because look, you can obviously see, if you look at the market, we are very bearish on the 1 minute time frame. So we need to see some kind of old high get broken. It doesn't have to be a change of character, because this isn't my traditional SMC model, right? Some of you guys in the comments again, understand that I have multiple edges. I don't have just one system. I have 3 different systems, and they all have different rule sets based on all of the data that has been collected of what works best. So you can use, typically you want to have some kind of low that brushed a high that brushed a low. Very simple. So you can see that we're obviously moving in this kind of bearish momentum, and you need to see some kind of shift. Again, the best part about the strategy is you don't have to execute if you don't get the confirmation. If price was come up here and then just continue like this, I don't take a loss, right? I only wait for the order flow to shift, because sellers, i.e. smart money, purposefully sold into this level. But again, I'm not right all the time. Sometimes I think they did and they didn't. That's the art of trading. It's all about managing risk and probabilities. But when you are right, it's smart money manipulated into these lows. That's why it's a very aggressive move, right? Not accidentally. They've deployed a lot of money because they want to see it go fast. Because guess what happens to you guys and a lot of other people when you see a big red candle or a big green candle, you rush in because you think it's gonna continue. And guess what? That is an inducement on your emotions and your technical knowledge. So they dump price strategically because they know that number one, there are stop losses here that acts as buy orders. So they push price into here. Now they can deploy their buys at a better price. So they dump it in here. Stop losses get taken out, and also sellers rush to the market. People that are in London session look at this and they go, oh my God, I need to sell the market, right? Not realizing what's actually going on at the higher level. So then essentially what we're waiting for is a confirmation. I need to see this high get shifted, right? Again, if this was now to just brush the lows, I'm not involved, because I need to see that smart money have not only manipulated levels, but then they've initiated on their intention. So that right there, that break of that old high is my confirmation. So now what I can do is I can go use a 5 minute time frame, right? I typically gravitate between the 5 and the 3, depending on what looks the most kind of juicy. And I will identify a strategic order block that I can look at trading from. So in this scenario, the order block, as many of you guys know, is the sell before the buy that breaks the high, right? So we're looking at the sell to buy level. You can, if you want, refine it to the actual buying momentum that comes into the market. That's something that sometimes I do, depends on the market profile. But for this example, we'll go clean, crisp, the sell to buy as a primary principle that you can use. I'm looking at taking my long positions in this level. And again, depending on the market sentiment, you can put your stop loss below the low or your stop loss below the swing low, depending on certain things. For example, in this scenario today, I didn't put my stop loss below the swing low because it's too big of a stop loss. It's 12.5 pips. So it makes more logical sense for me to go here at 6 pips, and then I can look at targeting our Asia session high. Right? That is the overall trade basis. And if I'm going to be totally transparent, I did leave some of the position open because of how bearish we are. I thought that we may have a higher time frame pullback, but that's not relevant to the strategy. That's a personal thing that I decided to do, which I'll show you how that's going after. So that is pretty much the exact step-by-step trade idea that was formed for me this morning during London session. And then lo and behold, you know, if we play the 5 minute time frame, in fact, we'll play it on the 1 minute time frame, so you can kind of see it play out. Right, it's basically, as you can already see, right, it's the sell to buy. This is essentially how that plays out. If you play price forward, you can see that price gets tagged into the level. That's the level that we're looking to buy from. That is going to be our take profit. It's a 1 to 4 risk reward, pretty much. Then it's just a waiting game. You're waiting to get tagged in, then you're waiting to execute in on your position once price gets into your desired level. Once price gets into your desired level, you can look at buying the market. Again, we'll go to a 5 minute time frame to watch this play out. I typically watch market play out on a 5 minute time frame. So price starts moving in your desired direction. Again, for me personally, stop loss to break even comes at a later point in time. Once you have some sort of pullback, once you have that aggressive move right there, you can already essentially move your stop loss into your break even level. and then boom, that is pretty much the full trade. And again, like I said, I did close only partially some of the position, most of the position actually, and let the rest run. And currently, where are we right now? So we're still inside of this trade. So I still have this trade active and open. In fact, I'll even pull it up because why not? I'm not sure if you'll be able to see from the camera, but hopefully you'll see buys from the same level, but you can also see that the trade is still actively open and we're still holding this position to trade higher. It's possible that I see that price is potentially looking to trade higher, right? I definitely see that there's a lot of potential for price trade higher for many different reasons that aren't relative to this strategy. So for that reason, we'll call this video done from there. I really hope you guys enjoyed the video. Comment down below what video you want to see next. If you like the video, like it, and don't forget to subscribe. Check the next video down in the description. Peace.